joining me on the podcast and on videos, Alan Green, CEO of Brand Communications. We're in a jumper, Al. It's August, fella. Are you cold?
No, wearing a shirt. I have a shirt on.
Oh, is it? Sorry, yes. Oh, lovely. Sorry. I'm here in my t-shirt,
Here in
unshaven.
my nice air-conditioned office, relaxing and just kicking back as I do on a Monday.
Are you relaxing in this market? Have you seen it?
I have.
In fact, let me share the indices here. Hang on, bear with me. Let me share the screen so you can see this. All right, look at that there. The Nikkei, all right,
that
down
yeah.
close to 10%. And look at this. In the last since 11th of July, it's been down 25%. Can you imagine that happening to the FTSE 100? Because that's equivalent in Japan, 25%. That's phenomenal.
That's pretty severe. But this seems to have been triggered by the US jobs number, which yes,
Yeah, well, both
bad.
jobs and manufacturing. I mean, the manufacturing was going back. The manufacturing has gone into contraction. It's literally ticked down more than they ever thought. So, America's growth has been very good, but there has been signs it's been getting less strong. It's not been improving as fast and slowing down a little bit. And you said jobs, they're still putting on jobs, but I think 179,000 was predicted to come out 114. So it's quite a big miss. And so you're saying now that this whole soft landing, the Fed had promised, we can stay higher for longer and the economy's not going to be affected. It's now not going to happen. It seems like they're late to the party. They were late to raising rates. They went too quickly. And now there's even suggestions. I don't know if you saw this. There were up until last week, there was a forecast of 2 rate reductions this year. That's all from the Fed. Now, 5. And they're saying there could be one this week, an emergency rate reduction. I think that's a bad move if that happens. I mean, reductions are good for the equities. When you emergency reduce rates, that strikes panic into the market,
It's straight back to the old QE scenario, isn't it? Where you're artificially manipulating markets and you don't have, you can only do that for so long. But we've seen governments sort of, stabilize the markets this way before. Obviously, there's a lot of that been taking place in China, also in Japan previously. But longer term, it's you're propping up a zombie market in a sense. You've got to let the market do its thing, I believe. And
exactly, I just wanted the
we're seeing this correction now.
Problem.
Yeah, we're seeing this correction now. We're in the summer months. It's a quieter market anyway, so why not let the market correct now, shake itself out, and then we can actually trade on a market that accurately and realistically reflects the economic backdrop. And so job numbers are bad. Manufacturing is down, but it doesn't mean to say it's a complete car crash. I mean, this reaction from the Nikkei is a huge overreaction in my book. But then again, when you've got markets propped up on steroids, as it were, with QE, that is what happens. And
there's also the Nikkei. And the US, it's been compounded by the fact with the yen carry trade, which is when in Japan interest rates have been 0 or minus for a long time. Hence why their market's done very well, and now they're starting to raise interest rates. So people used to borrow in yen because there's very little interest rates there, and buy US sort of asset stocks. And now the interest rates go up in the yen. People who now have to pay back a lot of the borrowing and the interest rates have gone up on that. So they're selling off their US assets to pay back the yen loans. And so that's, exacerbated. But with central banks, you do think they exaggerate the problem because if I just often wondered if they just kept the interest rate at literally 2%, just left it, whatever happens, let the market do what it needs to do. And because what happens is when you get, slow economic growth, it all comes down. It's almost like you've got a fire there that's, burning away nicely. And then the fire sort of dips a little bit. So what the central banks do is reduce interest rates and pour money into the market. It's almost like throwing lots of petrol on the fire. And the fire goes over the top a little bit. And you think, just let it burn down. It'll burn down the Fed comes in then, throws a lot of water on top of it. No, you've nearly put the bloody fire out, you fools. Oh, petrol, back on it then. No, stop doing that. Just, the fire can handle itself. We just, add a log now and again, not just chucking on petrol and water. It just exacerbates the whole problem. I'm just thinking, and the fact that they've been looking in the rearview mirror at data that's 3 months out of date. when there's been sort of almost real-time data coming out in America showing, it is slowing, the growth is slowing, everything's slowing. It's sort of
And
working. And then they
and
realize it's a lag factor. When you
yeah,
reduce, increase interest rates, it's 12 to 24 months lag factor before you see any effect. And they must realize that. I don't understand how they don't realize that.
and some of the biggest casualties of this are companies that come to market. They have a really good offering, but because of the skewed position, the skewed metrics in the marketplace, and also, the fact that investor confidence is badly hit because the markets perhaps aren't reacting as predictably as people would like. These companies don't see their shares reflect the true value of the actual of the underlying entity and the work that the company is doing. And so I completely agree. We should go back to markets that are just trading on the basis of the metrics that are represented by the country in question, and also the companies that make up that index. And I think we've been tampering with markets for too long. It's time for the banks and the institutions and governments to leave it alone and just
Yeah.
accurately reflect what the underlying economic situation and the companies that are trading on the indices.
Yeah, I mean, let's be honest. The rates, going back from the great financial crash to COVID, they were too low for too long, and that encouraged over borrowing. It did prop up, like I said, zombie companies that were never going to be viable. Now, if you leave the market perform, the business economy, the business world, it's a place that sort of operates quite efficiently. If you're a good
Mm.
business, you'll do well. You've got market share, you've got good margins, you're growing. Now,
Yeah.
the bad businesses who are inefficient and haven't got a good product either get taken out and improved, or they just go to the wall. And so the stronger companies become stronger, and then eventually you'd have disruptors as well come in and set that. It works efficiently, and then you start messing around
Mm.
with interest rates and pumping money into the system. It just distorts it completely.
It
Look
does.
at the indices here. We've got. I mean, Nikkei, like I said, the worst so far is down 10%. American markets, as we speak, haven't yet opened, but the futures are showing. Let's look at the futures. We've got the S&P
4%
500,
fall.
4.3% down, NASDAQ down almost 6%.
Mm.
So, yeah, we got Dow down 3%. But over here, we've got FTSE 250 down 4% now. It's getting a bit worse. The small cap down 3.66%. What have we got? The AIM down 3.44%. Even the FTSE 100 down 3%. This is a big seller. I do think there'll be, I did a sort of podcast, I do a podcast now called Macro Micro. I do think there'll be opportunities here, but largely, do you know, but 2 weeks ago, I started investing in some bonds. I'll be upping my exposure to that. Now, I see that them benefiting because essentially, if they do reduce interest rates, bond prices will rise. But I think if they do an emergency one, equity markets may wobble. Even the longer term, reduced interest rates are good for the equities. I think if they do an emergency one, it suggests the Fed's wrong. It's a bit of panic.
Mm.
So, but yeah, so look at the bond. All the bond yields are down. Looks. I mean, obviously, bond prices are going up. That
Yeah,
means,
yeah, yeah,
but
yeah.
look at the 2 year.
Mm.
This is
Mm.
fallen off a cliff. So yeah, so I think if you want a safe haven where you can return some money, of course it's not going to be similar gains you get in equities, but at the moment I think bonds are the safe play,
Safe
and
place, yeah.
we
If you
are in
want to
an
be in the
interest rate.
market, if you haven't taken
Yeah,
your money out of the market altogether, it's a good place to be.
yeah, and let's be honest, we are now in UK and America interest rate reduction cycle. So bond prices will go up, so you get upside on that, and you also get a bit of a yield. So anyway, let's talk about some equities. Al, what are you
Mm.
looking at?
Well, three equities for you today. We've discussed one of these already recently. Company called Trifast PLC, TRI.
Oh
Of
yeah,
course, there's the
yeah,
EPIC
yeah,
code. Um,
yeah,
this is a great company, and I can remember going back to, I think I mentioned this before, and Dr. David Paul, effectivist, God rest him, and he was a big fan of this company. Company's actually founded just up the road from where I am on the south coast in a town called Upfield. Trifast TR Group, trusted reliability is what TR stands for with the company. And this company manufactures screws, nuts, bolts, washers, clips, fasteners, plastic fasteners, metal fasteners, hardware for flat packs. They come out of IKEA and Dunelm and places like that. Cable fittings, security fasteners, tooling, driver bits, a whole range of stuff for sectors such as lighting, telecoms, computing, business machines, light vehicles, heavy vehicles, logistics, on and on and on. They operate in over 70 countries around the world, and they have spent this year largely going through a consolidation program. And I think they are now at the end of that process. They've consolidated a series of branches that they've had into a new national distribution centre. So everything's been streamlined. They're now in a big logistics hub, and they're able to distribute and look after clients globally from that point. So that's a huge step forward, and we saw some evidence of that on July 29th when they announced their full year results. Of course, that was last week. Underlying pre-tax profits up to 6.5 million ahead of previous guidance. So it shows that the savings that they're making is really starting to hit the bottom line. Revenue's up 22% from last year, driven mainly by the light vehicle sector. That's done really well this year. They've also, as a result of this consolidation, decreased their inventory by 15 million, and that's driven this higher cash conversion, and has also at the same time lowered company debt, which is hugely important. They also have a joint venture in China, a manufacturing joint venture that's underway over there, and the company management said that they're very confident in the outlook for the future. They see full year 2025 as a significant turning point for the company. The last year they paid a dividend of 1.8p. That was down from 2.25p previously. But they're going to reintroduce a dividend investment plan, and I think we're going to really start to see growth accelerate from this company. Now they have this national distribution center. They're reducing debt, and they're able to basically sell more stuff, and that's what it's about. This is a real cash cow of a business. I mean, they've really cornered the marketplace here. The company does have debt, but it's reducing that debt, and I think a 15 million pound decrease in inventory tells you all you need to know. Their debt was around 27.5 million. If they can carry on at this rate, in a couple of years' time, they'll have wiped that debt out altogether, and then they'll be on a completely different footing. So very well positioned. The chart, I think, tells you what you need to know. I think the market really likes the latest news. We're off those. Certainly the low that we saw in June. It's come nicely off that, and we're now seeing a confident response to the news. Obviously, the correction in the market may take its toll in the short term, but I think longer term, as a cash generative business, this is a very good place to put your money.
Yeah. Sorry, I'm just trying to cutting here. Look at this. This is right, the yield curve, essentially. Let me get rid of that. So when that it's 10-year, it's plotted against the 10-year bond, the 2-year bond, and now longer duration bond yield should be higher than shorter duration bond needs to compensate for the longer term sort of risk. But when you get, say, 2-year, the yield above the 10-year, then it shows is worry, and so it's not supposed to happen. So that's happened. This is the zero line here, and it's inverted. And they say whenever this inverts, pretty much it's predicted every recession since 1955, apart from one in 1960, was a false positive year. So it's done every one. So it's quite accurate. Like I said, it dipped below here, and now it's uninverting, which means whenever that happens, there's literally a recession within. And if I go back to the weekly chart on this, I'll show you this. Go back to 1980. Look at that. Every time this has got this, the price has gone below this minus 0.2 and rallied back again. There's been a recession within 24 months. Happened here. It was at the 89. It happened in dot-com bubble. Obviously, the great financial crash converted back in 2006. It predicts way ahead. Now, did it even predict COVID? I don't know how it did that, but it's a bit of a fluke. But look at this. It's never inverted so much ever And now it's coming back up. So we are the Americans. If you believe this accuracy since 1955, there's a recession nailed on for America. So, like I said, this will encourage Powell, Fed head, to stimulate, I think, and maybe in for another equity bull market after this recession comes through. But it's a very odd situation because the UK is getting better. Manufacturing is growing. Our services numbers out, PMIs out today. They're growing. So it's like we're being sold off with America, but we are improving. It seems like America's not now, or they were improving, and it's getting less good. So very
Well,
interesting play. But
well, I think the Brexit case for the UK was always a strong one, and it was always going to start to deliver at some point. So maybe we are seeing that delivery. So if there is a global recession off the back of this, which I mean, it's probably too early to call because this does seem to be a very sharp correction to me. But if there is a global recession, then UK could be better placed than many countries to weather it. Given this underlying nascent growth and the fact that we're not tied anymore to Europe. So anyway, that's just my opinion.
yeah. What time American markets open? Are they open today?
Uh,
1:30, isn't it normally?
yeah, they open at it's quarter to two, isn't it?
I can't see moving.
Quarter to three. Quarter to three.
But
2:45.
so that is 2nd of August. They haven't opened yet. Okay. All right. Marvelous. What's next, Al?
Okay, so we talked about Trifast, another tea company for you. This is a company I interviewed the chief executive, Charlie King, last week. It was late last week. That interview is out this morning. If you go to the Novus Communications and Brand Communication Twitter channels or our YouTube channel, you can see it there. So this company, it's the Tribe Technology are listed on AIM. TRYB is the EPIC code. The company's currently got a valuation of just over 10 million, and it's an innovator in the mining sector. So this company was founded. Charlie King was very much sort of at the forefront of the ideas behind it. Founded in Western Australia, 2019, based in Northern Ireland, and Charlie had some ideas some years ago of how to develop the mining industry, make it a safer place by introducing, I suppose, an element of AI, an element of technology, and automating the processes such as drilling, such as sampling, and so on. So 6 years further on, or 6 years further on, this has become a reality, and the company manufactured its first drill rig, its first autonomous drill rig. There's a video floating around on YouTube where you can see that rig operating, and all through the process, the company have had support and help from the mining majors. Indeed, Anglo American, AAL have both bought and tested the rigs. Another big company called Major Drilling, they've also bought and tested the rigs too. And their first rig has just been shipped from the manufacturing facility in Northern Ireland. And Charlie was naturally very excited to see this dream come to fruition. But given the safety record in some areas of mining and some of the concerns, and also commitments to social values, commitments to ESG and other factors, I think this is a very timely intervention to bring automated mining gear into the marketplace. So the first rig has been shipped, and obviously they're working to build the other products in the sector. And I fully expect to see this company continue to develop and grow. The share price, of course, has drifted back, I think, very much in line with the sector. But I think at this point now, we're just starting to see this little build from July through to August. Company's got a market capitalization, as I say, of just under 11 million. Has traded high in the year as 11p, currently at 4.5p. So I think that now they're manufacturing, now they're selling. This is a good time to come in. It's a good opportunity. But I would urge you to go and look at that interview. I think Charlie explains the opportunity and the investment proposition very well. But TRYB, Tribe Technology.
Okay, marvelous. And finally, Al, what's next?
And finally, we're sticking with mining. And this is a company some of you may recall from a few years ago, we spoke frequently about a company called Prairie Mining, who had coal mines in Poland. Only they are in dispute now with the Polish government. So the company changed its name some years ago. It's GreenX Metals. GRX is the EPIC code. This is a company that's based in Perth in Australia, and the company is currently suing the Polish government for £737 million in damages through lost earnings, through lost investment, and all the rest of it. So they're partnered by they have a legal partner that's helping them to take that to fulfill the litigation process with the Polish government. They have a legal fund that is sitting there and is gradually being used up to complete the litigation process, and they are very confident in the outcome of that claim. The company announced quarterly results, a quarterly update to the end of June. The company has 7.1 million cash at the bank, in $7.1 million at the bank, has no debt, but it also has two further projects, and last week it announced the acquisition of a third project. So I'm going to run you through those projects quickly. We have the Arctic Rift Copper Project in Greenland. About 18 months ago, the company took ships and surveying equipment up to Christiansand Sound, which is an inlet to the north of Greenland, and they landed a team of people there. They landed some equipment, and they landed some amazing vehicles manufactured by a company called Sherp, SHERP. And these look like moon rovers. Literally, they have huge tires and they can go anywhere. So the team drove off across the tundra, and they went to the prospects at the Arctic Rift Copper Project, and they were chipping copper away with ice picks, and the copper was literally came out of the ground more or less smelter ready. So they've got an incredible find up there, but obviously you've then got the logistics of mining it, processing it, and then getting it to market, which is always a challenge. So that's the first project. They have another project called the Eleanor North Gold Project, and the team announced in the quarterly results they're currently collaborating with the Geological Survey of Denmark and Greenland to fast track an updated geological map of the asset. There is a target they called Noah Pluton, which is highly prospective for gold and other minerals. The company will be developing that. And then August the 2nd, the company announced an earn-in agreement to acquire 90% of a private German company called Group 11 Exploration, which owns the Tannenberg Copper Project. Now, this is northeast of Frankfurt. It's in central Germany, and it's in a region called Richtelsdorf, where there are the historic Richtelsdorf copper and silver mines. These closed in the 1950s, but as with so many old mines, they're being re-examined. Modern data techniques, modern mining techniques are going back to revisit these assets. The company currently have identified a number of drill targets over a 14-kilometer long stretch called the Richtelsdorf Dome target, and these include some pretty good grades: 2.1 meters at 2.7% copper, 48 grams per ton silver, 1.5 meters at 3.7% copper, 33 grams per ton silver, and it's the geology, the type of geology is sediment-hosted copper, which is one of the most sought-after forms of copper deposits in the world. It's easy to mine, it's easy to produce, and Ben Storkovich and the team said that this was a huge opportunity for them, and it was very complementary to the Arctic Rift Copper Project. So I suspect they're going to continue with the litigation. Once that litigation is complete, and they receive their funding from the litigation, they will then use the funding and they will start to develop these projects in greater depth. But as it stands, it's a bit of an asymmetric play because you've got the nascent value on the one hand from the pending the pending judgment, but of course they've got these other projects too, which they can't really do too much to or get too much involved in until that money comes through. But the legal team that are prosecuting the case have a history of 95% of their cases are wins, so there's a pretty good chance, given that they're taking it on, that they're going to get this over the line. So more to come, but watch this space.
Marvelous stuff. Cheers, Al. Do you know what? I've got to shoot because I've got a major delivery happening at the house. We just moved in, and it seems to be whenever there's a delivery, my wife intends to go out.
So yes, funny to say that. Yeah. Funny to say that. I think the window cleaner's just arrived as well. So there you go.
Yeah.
Same
marvelous stuff. Cheers, Al, and speaking next week.
Thanks, Josh. Speaking next week.
Let's hope the market's a bit nicer next week. There's a nice bounce to be happening.
Hope so. This could be a storm in a teacup. It could be a storm in a teacup.
Well, it could be an opportunity as long as the Fed doesn't panic the markets too much. I think it's an opportunity, you know.
Yeah. Well, I think a lot of traders will be looking at that dip in the Nikkei and thinking, "My goodness me, there's a fantastic opportunity there."
Yeah. Marvelous stuff. Cheers, Al. Speak next week.
Cheers, Josh. Speak next week.